Hey, good evening, traders. It's Pete, obviously from Iconic. I just want to touch base, go over some thoughts, go over some charts. I'm going to do some more chart breakdowns for you tonight, and touch a little bit on just like the trading mentality. Um, I actually came across, I was cleaning up my garage, I came across three old books. One of them's a hardcover of Trading in the Zone by Mark Douglas. The other one, oh my God, it had to be from the early 90s, called Rule the Freaking Markets. And it was an awesome book. Really enjoyed it. So I'm going to be reviewing them this week and hopefully have some little tidbits to share with you. But before we go into charts, I just want to talk about hesitation, share size. Some of you are making progress, going from red and then going from green to red and then going to pretty much break even minus commissions and then having more green days and red days and then finally getting over the hump. But a lot of you are still struggling because of the past damage that was done in other rooms, and the million dollar problem or $1 million. If I had a solution for it, would be fantastic. And the only solution I have is we just got to do it. And that's, I mean, I get it all the time. It's okay. We got to cut our losers, and we have to let our winners run. How do we do that? And I always say, guys, you got to step out of your comfort zone. Okay, and it doesn't need to be 100 yards out of your comfort zone. You can start at 10 yards out of your comfort zone. Okay, so if you're one of those traders that let your losers run and take your profits way too quickly, I'm just gonna say you're not gonna make it in this business, and you need to make that decision of how bad do you want it. Okay, because regardless of the losses we all have incurred, there comes a point in time where A, you're going to want to give up, or B, you're going to blow up and not have any more money, and C, you just get frustrated and say, okay, I just can't make this transition. And I don't want to see that happen to anybody, because if you study the webinars and if you listen to me and my recommendations and trust the moving averages and trust the VWAP, you will make it. But you can't hesitate. You're not going to be a millionaire overnight. Okay, you need to reduce your share size until the comfort zone that you're out of by letting your winners run becomes comfortable. Okay? And as soon as the trade goes against you, don't be adding and adding and adding and adding. Get the hell out of the freaking trade. Okay? Don't add to trades. Okay? And this is for pretty much 99% of the room. Okay? Do you have traders in here that add to trades? Okay? I'm saying for the new guys, don't. Okay? Because I have a totally different outlook on that. And for you to be profitable, you need to cut your losses right away. Keep your stops tight. Have your perfect entries. You guys know where your entries should be. You can't take trades that don't exist because you're bored. You can't be adding to losing trades to higher your average, hoping it's going to come back down. Okay? That's what probably got you in this situation in the first place. Okay? Your first loss is always the least. So take the damn loss and focus on your winners. Okay? I was talking to a trader the other day, and about the same thing. I'm like, okay, look, you want to bank it, take 75% of the trade off, bank it, let the other 25% run. Just let it run and see what happens. And then once you get comfortable with that, cut it down to 50%. But you have to believe, A, in yourself, B, in the methods, C, in the charts, and me. Okay? And if you're having problems pulling the trigger because you're scared you're going to lose money, then you're not believing in one of those four things that I mentioned. Okay? You have to accept the risk with every trade you take. And every trade should have a predetermined risk. Okay? You have to. You have to know when to get out of a trade. Okay? If your goal is to make $500, okay, if that's your goal to make, okay, you risk what? 150, 175 on the losing side? Once it hits that stop loss, get the hell out of the trade and look for something else. But you should only be taking A to A plus setups, period. No guessing. No, oh, it's midday, I'm bored, I'm just gonna make some trades. That's bullshit. We don't do that. I don't do that, and I don't want that in my room. We take A plus trades, A trades. We take it easy during lunch, okay, and we do what we're supposed to do to take care of ourselves and our money, okay. And if you don't have the discipline to use mental stops, put your stops in the market. Because then you're not going to have a choice. Okay? That's what's going to protect your capital, is putting hard stops in the market. Okay? If you want to be in this business 6 months from now, a year from now, and hopefully be doing this for a living, you have to make these changes to your account. You keep on doing what you're doing, you're going to get the same freaking outcome, guys. You have to get out of your comfort zone. And like I said, even if it's 10 yards, get out of your comfort zone. And then next month it'll be 20 yards. Next month it'll be 30 yards. Okay? 714's a hell of a trader. I love the way he trades. Eric C is a hell of a trader. I love the way he trades. DMAC and AP, they trade differently. Not good, not bad, but for 99% of you in this room, okay, with all due respect to the mods with DMAC and AP, I don't want you trading the way they trade. It's as simple as that. They trade differently. They're at a different level. They don't necessarily trade my style. They have their own style. I go with the trend. They go against the trend most of the time. Okay? DMAC likes to add, and it works for him. Okay? But there were some pretty big trades that he had to hold on to for a long time just to average out that probably would have put a lot of you guys out of business. So for now, until you get consistent, 714, Eric C, myself, Shoshana has some awesome calls when she pops up in the room. That's just like for play money. You just, you pick up, $1,000, $2,000 worth of her stuff and just see what happens. Chicago Lou, great guy, great with the news. When he posts something, he's posting it for a reason. Okay. He's like my quiet mod, but when he posts something, pay attention to what he's posting. Okay. Cause there's a reason why he's doing it. Will is, been with me for a while, training, trying to make the transition. He trades a different style than I do. Not good, not bad, just different. But I want you to learn my style first. Okay? And then once you learn my style, you're going to realize that it's pretty damn simple if you follow the rules. Once you learn my style, you'll have your core trading style. And then you can start exploring different trades and different trading styles. Okay? So that's it on that. you can't hesitate to pull the trigger, because if you're hesitating to pull the trigger, like I said, you haven't accepted the risk to be in the trade. You're going to take yourself out of it way too long, or you're going to be late. If you hesitate, you're going to be late and you're going to miss the move, end up chasing the stock, and you're going to end up probably losing. So you got to be fast, pull the trigger. You see the setup, believe in yourself, believe in the setups. The traders that I do work with are just nailing the entries. Like most of the entries are like right on, like entries that I would have taken. It's just cutting the winners. And I cut a couple of huge winners this week way too early. Way too early. But it is what it is. I mean, I'm working on the same problem. But the only way to do it is you get better every single day. But you're gonna have to want to get better. You're gonna have to watch these webinars over and over and over again, and you got to implement them. It's as simple as that. Forget what you learn in every other chat room, okay, except for the higher lows, the lower highs. I mean, that's obviously important. Candlestick patterns are important. Candlesticks are important. Hopefully by now most of you guys signed up for a free Pristine.com account to get to their weekly webinars, which are a perfect complement to mine. So you just have to follow the rules and be disciplined. And put your stops in the market if you can't control them. And once you're up in a stock and it's green, don't let it go against you. Okay? Don't. Okay? If it looks like it's changing direction, you see some volume coming in, you might get an exhaustion candle, take the freaking trade off. You can always get back in. But you should never let a trade go back against you once you're profitable. Ever. Ever. So that's enough on that for now. Let's go over a couple stocks. Oh, I also want to touch base because we do have a couple new members. I used to be with Centerpoint, and hopefully tomorrow I'll talk to 714 or somebody else. There has to be a way to mark my entries and exits on TOS on the charting system. I use Lightspeed now for all my executions. So far, I love it. Extremely happy with it. But their charting system, since I came across TOS, which I was using for free during my transition from Centerpoint, setting up my new LLC to separate my trading from the chat room, and closing my Centerpoint account, and then opening up an LLC account over at Lightspeed, I was using the TOS charts. And what TOS charts has are these upper and lower deviation bands amongst thousands of other tools and indicators and studies. I mean, these are probably the best charts with these studies that I've seen and I worked with. And I've been with pretty much every platform that there is. So the one main thing that I love are these upper and lower deviation bands. They're just beautiful. So I'm going to start this with RH, Restoration Hardware. This is a short I called out. I don't know. You guys can see the date on here somewhere. I don't even know where the date is on these charts yet, but it was in the last week, I think. Beautiful short at the open, just perfect fade down. Okay, and we're looking to cover, around the 77s where the lower deviation band was. Got close. Let me go here, right here. Okay, it got close to it. It bounced up, went through VWAP, but it held right here. Okay, this is the 20. This is the 9. This is the 20. It held the 20-period moving average. You can see these candles starting getting smaller and smaller and smaller. You can see the moving average declining or descending. To me, that says this stock is going lower. So you reshort on a break of VWAP. It goes back under 9, and you ride it back down to the lower day. It's as simple as that. it was a painless trade. And for the aggressive traders, you could have shorted this, you know, stayed with it, and just added right here, and then still ride it down. Me, I take my profits when I see this with volume, and I'll wait for a re-entry. It's as simple as that, especially at the open, because the open, you get the moving averages at the open aren't as important as they are during the rest of the day. But I tell you what is more important than moving average at the open are the upper and lower deviation band. Okay, but this was a really sweet trade. This was points in a matter of minutes. Just a beautiful trade based off the moving averages. So that was Restoration Hardware. Next one we have JAH. I think I went over this on YouTube. I don't believe I touched on it in the webinar. These are parabolics, okay, or falling knives. Okay? This is actually a parabolic. Falling knives is when they drop. I tend to stay away from these, and I highly recommend new traders stay away from them as well. Again, we have traders in a room that nail these all the time. Okay, to me, these are my trading enemies. I usually don't play these, so I usually lose on them, and I lose pretty big. So actually, on this one I caught, which is nice. I caught this short. Had a nice little double top. Looking to cover a VWAP, which I did. It broke VWAP, and then it came back up. News came out that JAH and what was the other one? I don't recall the other one, but I think I have it up here. We're merging, or one's buying the other, whatever. Had beautiful pop. First sign of weakness you have you short a little bit and just ride it down, and always look to cover a VWAP. And if it goes past VWAP, you can always reshort it. This came past VWAP, it held a 9, and then it went back up. So it comes up, double top, got some volume, huge move. My risk would have been up to the high day, so I had about a 1.5 risk, which I sized accordingly. And that's something else. Not every trade you take should be the same size. Okay, not every trade you take, you should have like, oh, my stop's $300 per trade. It doesn't work that way. You have to size according to the stock that you're playing, the volatility it has, and how much room you need to give it not to get stopped out, but still hit your risk-reward ratio. Very, very important. Okay, Newell. This was the other side of the trade. This one, I didn't play both. I think I let Newell go. But again, beautiful came up, high day. And then it was nice. It opened up here, didn't even come back to testing that. So you got weakness all of a sudden. So you take it down to VWAP, broke VWAP, went even further down, hit the 200. You had the previous day close, which is major support, and then it bounced right back up. But on these, you just look for, accelerated moves to the upside. You wait for the time in sales, the acceleration to slow down. You wait for some red prints. You look for lower highs, and then you come in and short them and look to cover at VWAP. And then, if it looks strong, you can take them long off of the VWAP with a very, very tight stop. This is VRTX. I think this was a day that 714 myself played it or not. I don't know. But this stock was great because it was really predictable. Really predictable. Every time it hit the upper deviation, it faded. Every time it hit the lower deviation, came back up. And then it faded, came back up. But what I wanted to point out, again, for the newer traders, is this stuff right here at 118.39. This is the stuff. You guys know that by now. I'm sorry. Most of you guys know that by now. The new traders, you don't. This is the stuff. Okay? So when you see this over and over and over, you see the candles getting smaller. you see the moving averages starting to curl down, you know this is going to be a short. So as soon as it breaks to 20, you take it short. So you take 118 short in your first target. Where's your target going to be? Well, the first resistance that you see is a VWAP. And then right there you have your 200. So that's going to be your target, around 117. That was a fast-ass point right there. Then being you got to 200 in the VWAP, you could have hopped in and scalped it here for another 50 cents if you wanted to, because you had the 200 for major support and you had VWAP for major support. Tested the 20, it failed, but it would have been a nice 50-cent move, $500 on 1,000 shares. But this stuff is what we look for, okay? It hits a certain level, it can't get through, moving averages starting to curve down, and that's when you get your shorts, okay? This is CF. This was just a beautiful, beautiful short. I don't think I caught this, but I love the pattern, which is really what I wanted to show you. So it opened up, broke 200, reclaimed the 200, made a higher high, okay? But you see the moving average cross, 920 cross right there. Okay, that's a sign. You guys know, change the direction, change the signal. Stock's going to be going the other way. You have the 200 period moving average declining, okay? The stock tried to pop up, didn't get anywhere. It stopped, I believe, right here at the 50. Okay, so you know the stock's weak. As soon as it breaks the 200, take it short. Okay, then when it breaks the VWAP, if you didn't take full size, add to it. Okay, because you knew, I had a very strong feeling that this was going to break VWAP. And what's my risk? Maybe 30 cents because my 200 period's right there. So it broke VWAP, 42. Keeps on coming down, bounces up a little bit of short covering. It holds at 20, comes down, hits the bottom deviation band. You cover. Okay, it bounced back up and it faded a little bit more. Okay, but once it's at this lower deviation band, it usually bounces. So you could have caught it at the lower deviation band and grind it out for a long. But the short was beautiful. One leg down, consolidation, failure to pop up, reclaim the 200, moving average cross, and just a perfect fade down. And you cover at the lower deviation band. This is CMG. I've been playing this stock a lot more recently. I enjoy playing it, but you have to be careful just because of the way it moves in dollars. But you can see it's been holding VWAP, holding VWAP, holding VWAP all day, and it's been holding the upper deviation band. Okay, so when it came down, you got the 200 period right there, right on top of VWAP. Okay, they're pretty much right on, maybe a buck away, 50 cents away. So it took some long here. What's my risk is VWAP. It held VWAP, so why wouldn't it hold here, especially with the 200 period moving average right there as well. So they both held. I took it long and made a nice, easy shit. I think this was like a 6-pointer. 538, I think it got filled. And I know I didn't get up to 550, but you can see holding it, and then you can see just grinding up. And it was riding the 9 all the way up. No reason to sweat. You just have to know when to get in and when to get out. And when the stock is getting close to the upper deviation band, it's time to get out. If your stock comes from the lower deviation band and you're long, your first target to get out is you should be above all the MAs, first of all, if you're long. But your first target should be VWAP. Okay, and if you're above VWAP, you got to make sure you know how far away you are from VWAP. Your target will be the upper deviation band to sell. Okay? But we don't long stocks usually unless they're above the 9 and the 20. And we got to check all of our time frames. or weekly or daily, 60, 30, 15, 5, and 1. You have to, just for the moving averages and to make sure that there are no important support resistant levels for double tops, double bottoms, etc. This PVH was just a nice trade. I had this short called the pre-market. It gapped down. I still shorted it. I got about a point, I think, on this one. I tried to get filled down here at the bottom, which I didn't. But I got filled in the second candle somewhere around, I think, like 79.30 or something like that. But it was a nice, predictable trade. The stock was been weak. It was weak pre-market. I didn't expect this, but as soon as I saw it gap down, I took it short. Okay, so that's what I wanted to show you on this one. And then, this bottom deviation band acted as support all day, and this VWAP acted as resistance up until here. So again, you can buy, you can sell, you can short, you can cover. You can play these little channels all day long and just scalp them while you're looking for real trades. Okay, something else I want to cover real quick that I just thought about. There's no sense playing stocks that don't move. If there's only like a 30 or 40 or 50 cent change of price in the high and low of the day, don't waste your time trading the stock. The stock's not going to be in play, and you're not going to make any money. You got to trade stocks that move and that are going to pay you. And trading a stock in a very tight range is not going to pay you. We're not here to make 10 cents. We're not here to make 20 cents. Okay, if you are, you're definitely in the wrong room. I'll take those scalps, but they'll be $50, $75 scalps. I wouldn't be playing stock with no range looking for 20 cents. It's just that's just, to me, that's just a boredom trade. Why even bother? I'd rather spend my time scanning and looking for setups. Baidu, this I had up and I missed. Had a beautiful short, which I didn't catch at the open. But whenever you see this consolidation in Baidu, whenever you see this, you got to anticipate the snap. You have to anticipate the snap. Okay? Baidu is known for that. Hold on one second. Be right out. Okay, you have to anticipate the snap. Baidu is known for coming down, retesting, consolidating, and then as soon as it breaks and it comes back and retests the VWAP and the 200, take it short. That's why I wanted to show you this. This is the way Baidu used to trade, and that's why I love this stock so much. It used to be very, very predictable in the way it moves. Charter, CHTR. This was another nice trade. You can draw an actual trend line from here all the way across to here. Okay, you had a double bottom. As soon as that double bottom broke, you know it's fading. So let's just say you got filled at 175. At the time I took this picture, it was 173.35. That's almost 2 points, and that's simple off a simple trend line support break. It took the 9 period, rode the 9 all the way down, all red candles. No reason to get out of this trade. None. It's a beautiful trade. You had the moving average cross, you had all the moving averages above the stock, and it was just simply riding the 9 period all the way down. Okay, that's what we look for. ICPT was another one I've been dabbling with this past couple weeks. Pretty much double bottom. You see the trend line support had right here. Okay, it broke, came back, tested the 9 and the 20, didn't get close to the VWAP, so I knew it was still weak. It came down, tested the lower deviation band again. Okay, and then it kind of got bought up, but it faded right back. So I think it got short like around 142.30, 143, or 142. 50, somewhere around there. It was right in the middle of this. And then this candle was put in, which to me is, it looks like a small doji, but where it was put in is what matters to me. It was right below the 9. So I knew the stock should fade. So I took it short, and I wrote it down. I didn't get down to 139. I sold it in the 139s, but I didn't sell it at the lower day. But it's simple. You just got to look for this trend line support break, holding the 9. It tested VWAP, failed. You know the stock's weak. It's been in a downtrend. Just short it and just let it work. Okay. Couple more here. BHI. Again, the simplicity of these trades is what I want you to understand. It's patterns that we look for. It's patterns that professional traders take advantage of. Okay, it's patterns. It's not guessing. It's not anticipation. It's patterns. And you need your confirmations. Again, simple low of day break. Okay, the aggressive traders would have taken it right here. The 4509 with the VWAP break, you can actually draw that little triangle, this ascending triangle, anticipating this break. Me, I got my trend line I drew right here at 45, which was trend line support. As soon as that broke, game on, came down, tested the 20, it failed. You go short again, and you ride it all the way down. Simple, low a day, trend line support break. Tested the 20, got rejected. It's just short, all the way down. No doubt about it. This is CACC. I think I went over this last time. This one I got a couple points out of, but I left a lot of points on the table. This is the one that had, at one point, like a 6 or 7 point spread. And then the spread started narrowing and narrowing and narrowing, and getting tighter and tighter, which is an indication of a move coming. So I got short, and I think I was probably like 2 points under just because of where I got filled on trying to split the bid and the ask. But still, I got split in the middle, which was great. And then it ended up fading, 229 down to 219. I didn't capture that whole move, but I caught nice points off of this one. Beautiful points off of this one. The reason I brought this up was to let you guys know, when you see a stock with a huge spread, and the spread starts getting tighter and tighter and tighter, expect the move coming in the direction that the stock is working in. Okay, you have to. I was going to pull up my light speed level 2, but I can't do that right now. But I want to make sure that most of you guys on your level 2 or your montage or your order entry system, that you can hide your size, that you have an option. If you want to buy 2,000 shares of a low floater, you can only show 100 shares, and you'll just keep on buying until your 2,000 shares get filled. Okay, every platform should have that. Okay. And on Lightspeed, it says visible. So if I have an order for 2,000 shares and I don't want anything visible, like I want a blind order, I'll just put 0. If I'm trying to split the bid and the ask, I'll just throw it out there. Nobody can see it. And then when it gets matched up, I'll be the first one to get filled. If I have a 2,000 share order and I only want to show 500 shares, order will show in level 2, but it'll only be a 5. And I'll just stay there until the full order is filled. Okay? It's an awesome tool to have. Okay? Especially when you're trying to get in a stock that has a big spread. You have the option to do hidden orders. You need to have the option to do oversprays, which you have if you have a stop limit. You can put parameters on your stop limit. So you do a stop limit. Let's say you want to put your stop limit at 2550, and it blows right through to 2550, and you didn't get filled. You can add, a 6 cents overspray to your stop limit to be 256. So it'll give you from 250 to 256 to get filled. If the stock blows past 250, you have a 6 cents leeway to get filled. So hidden orders, being able to split the bid and the ask, making sure you have the right routes, access to to dark pools if needed, and but a lot of the stocks that I play have pretty big spreads, and that's why it's important that I use hidden orders. Sometimes I get filled and sometimes I don't, but when I do get filled, it'll save me $1 or $2 on a spread. And I usually try to add liquidity, because especially now with Lightspeed, they pay me to add liquidity. So I went from Centerpoint, where I had my commissions, plus if I added or took away liquidity, I had to pay them both ways. So now I have my commission, which is a little bit less than Centerpoint, and if I add liquidity, I'm actually getting paid now. Not much, but I'm actually getting paid to take that trade. So, adding liquidity is great. Okay, but we have to get you guys to know when to take the trades and when to get out properly, and getting yourself to believe that you can do this. Okay, when I tell you it's not hard, it's not hard. The emotional aspect of the trading is what we need to work on. Okay, I just need to make sure we all understand why we're entering the trade based on the moving averages, where the targets are. Like I said, this is primarily for the newer traders that haven't really seen any webinars, to understand what we do in the room, because it's very hard to get a feel in a week or a day, no less, without having any training whatsoever of how we trade. So that's why I kind of went over the charts in a little more detail. So tomorrow I'll show you guys a level 2. I'll show you the different options I have on it. Hopefully you guys will have the same options. And I'll go through those 3 books that I found today and look for some little gems, like I said. And we really need to start working on stepping out of our comfort zone and letting our winners run. Because once you start letting your winners run, you're going to become a profitable trader. There's no doubt about it. But you just have to want it bad enough. And it's just fear that's stopping you. It's just fear. Okay? And fear doesn't exist. It's all in your mind. It didn't happen yet. Okay? Following a guru is one thing. Okay? Because they're telling you this is going to happen, so on and so forth. And, unfortunately, most people tend to believe that crap. Okay? But you can't have fear when you're trading. If you're in a winning trade, you're doing the right thing. You picked the right stock. You got the right entry. Why get out unless you're scared of losing the money? Okay, but at the same token, you'll let your losers get way out of hand, which is ridiculous, because that should never happen. It should be the opposite way around. Cut your losers. Don't add to your losers. Cut them right away. Okay, step out of your comfort zone a little bit at a time. Take 80% off, 75% off if you're green. Let the other 25% run, and you'll be surprised on how fast your account will grow. And then once you start seeing it grow, you can say, holy shit, what the hell have I been scared of? Simple as that. Fear does not exist unless you believe it. You can't be scared of something that didn't happen yet. So take control of your emotions. Watch the daily motivational videos, please. You want me to put one on in the morning when I actually get to the room at 6 like I'm supposed to. I will, but no one really shows up until 15, 20 minutes before the bell anyway. But Les Brown, ET, they're all on YouTube. Watch them. Okay, you got to start believing in yourself, believing in your abilities, and if you want to make this happen, it's up to you to make it happen. But you got to change. You can't continue to do what you've been doing. Okay, the traders I've been working with on the phone or whatever, I see dramatic improvement. I mean, huge. And then I have traders that are still doing the same mistakes over and over and over again. And you have to break them. Otherwise, you're not going to have a chance. And just asking you to trust my methods, follow my trades, even if it's only 10, 20 shares. Okay? The main thing, guys, is to get your confidence level back. Okay? And then once you get your confidence level back and you see why I'm buying and why I'm selling, you can take that and apply it to any stock. Okay? Just not the whippy stocks or the crazy stocks of the day. And that's it. So on that note, I'm going to let you guys go. Have a great weekend. I actually am taking my son to Florida, the Disney, for Christmas. I will be out of the room on the 23rd, probably Christmas Eve, and then Christmas we're closed. But after that, I will be in Florida, but I will be in the room. So I will be around. And that's it. In the meantime, you got Chicago Will, Chicago Will, son of a gun. Sorry, man. You got Chicago Louie. You have EC, you got 714, and for, the aggressive traders, you got DMAC and AP. But like I said, if you're struggling, please stay away from their calls and stick with EC and 714 for now, and Chicago Lou. All right. So hope all's well. Extremely disappointed in the Giants today, man. They played a hell of a game. They should have won that frickin' thing, man. But of course, they came back. I don't know if you guys care, but I'm just so pissed off. They were down 4 touchdowns. They should have won. They came back, tied it up, and of course, last minute, they frickin' lose to Carolina. Well, it was one hell of a game. So, anyway, time to find a different team to root for the playoffs. So, I shall see you guys tomorrow morning. Take care.